Thank you, Greg. Harden, fantastic. Matul, good to see you, buddy. Sharon, good to see you as well. Beautiful. So guys, we got a lot that we're going to get into here today. We're going to cover some of last week's fundamental news. We'll cover some of this week's fundamental news, some trade setups. We'll go through a few things together. Any questions you guys have, feel free as always. This is the time to ask them. And so let's get into it. Again, not acting in my capacity as a commodity trading advisor. I'm simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you have to be aware of any and all risk, understand that risk, be willing to accept that risk and take on that risk. And anything covered in today's presentation will not constitute financial advice nor solicit you to buy or sell any securities of any single type. Um, for those that don't know me, um, I am James Bishop, been in trading education for 16 years. I am licensed. I have my 215 and 65, 63. I'm a founder of a managed fund, so where we do individually managed accounts. I can tell you guys, I'll actually show you guys. This is what we've done to date. This is as of July 30th. I need to get August numbers up here. It's on my to-do list, but my to-do list has a to-do list that has a to-do list. Um, and this is so in the past 3 years, we are up 101%. And yeah. Jerry said, how old's that photo? Jerry, that is from um I want to say it was right around like January or February of this year. So maybe no, 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 no. It was March. It was March of this year. March of this year. So March of this year. Um So let's see. Also, I have a retirement estate planning company where we help people retire tax free, learn about how to retire tax free. We help people um, we help people do, take advantage of things that really have contributed heavily to the wealth inequality gap. And that's just simply because of how you can pass on wealth and how you can use your wealth and grow wealth while taking income. That's where I'm extremely passionate about and what I'm passionate about at the end of the day. And I also am working on my doctorate in finance and economics as well, for those that don't know me. First things first, as always, as I do every week, I am going to share out the Discord channel. Here is an invite to it for everybody. Let's see. There you go. That is our Discord channel. Join now. And excuse me, guys, just bear with me a little bit. I am still fighting whatever bug my assassins have sent out for me, but I will not fall. I'll tell you, I haven't had a sip of anything in probably 2 years, which is crazy. Um, I never really have been a big person to have a little nightcap or anything, but I've just been so none of that yet, but who knows? Jerry, I could not remember what you told me, and next thing I know, I go to type in OSCILL, and the only thing that came up was oscillators for my Google search. Okay, I guess I have programmed my Google to tell me what to look up and what I'm allowed to look up in this world. So I'm gonna look some of that up to knock this out. But so, a couple of things, guys. Stu here has been offering great trade setups and things like that. I'd love for you guys to get involved. Post your trade setups, post questions you guys have. I'm going to be doing so as well. We'll make sure to share these out to you guys. Interact. If you have questions on things, if you need help with something, this is a great resource, right? I have let's see, there are right about 220. let's call it 275, 280 people in this thing now. So we need to be growing it and using it and let's do it, right? Um, so join, and interact. We'll make announcements there as well. Special sessions this coming week. I will be having a webinar on Monday talking about how you could potentially have kind of risk-free retirements. So what I'm going to do, I'll share this later. Actually, I'll share it now. Here it is. What I want you guys to do, use that link really quickly. That'll let you get registered for the session coming up. And I will definitely looking forward to seeing you guys there. I'll share it at the end of the presentation as well. Look, here's the reality of it, okay? Here's the reality of what I have the ability to do. Actually, you know what? Give me a second here. Mm, I got 42 daggum emails. And sorry, can you tell I'm working on a dissertation with all these articles down here at the bottom? Give me a second. I'm going to show you guys what we have the ability, what I have the ability to do for individuals. Um, this right here. Look, this individual, I'll zoom it in a little bit. Let's go 150. This individual right down here, right? We'll talk about all the other stuff that I have. But this individual right down here at the bottom, or in the middle of this page, on May 21st of 2025, they opened up an account with me. And on that day, they put $100,000 into that account. 30 days later, they're sitting at $131,299. Right now, the accounts that I have for individuals are giving a 30% bonus plus a guarantee of 9.5% per year. Yes, I said it, a guaranteed 9.5% per year plus any market returns. And on top of that, your floor rate, which means the most you can ever lose, is 0%. And there's other factors in there as well, like things that help if you ever have to go live in assisted living or long-term health or anything like that. This is what I do is I help people day in and day out. Now, if you want to join the webinar and do it that way, that's fine. And click on that link right now and register for that. Or the other thing I'll do for you guys right now is I'm gonna send you guys um we'll just do this one. We'll just do initial meeting, okay? This is a link for you guys. You guys can book time directly on my calendar. Let me just make sure that that link is working. Perfect. You guys can book time directly on my calendar. And if you have questions, the only 2 days, if you book on the 19th or the 20th, I'm going to have to cancel because I'm going to be in class on that. And actually, I'll probably just have either Brent or another one of my teammates. I got 20 agents now that work with me, and I'll have one of them reach out to you, even if you book on my calendar at that time, but I'll let you know. So if you want to find out more information, join the webinar or book time with me. I don't mind. I'd love to talk with you and see what help I may offer. So let's jump on into it. Ain't nothing but to do, ain't nothing to do it but to get to it. So let's go in first and look at some of last week's announcements. So last week we had manufacturing prices. They were kind of on par with where they were. Construction spending is down again, right? So we've been seeing that this trend of construction spending going from 0.4% up to down, which every year about this time, it's in the negative generally. And then we had Jolt's job openings, less jobs again were open. That doesn't mean that they were hired. That also could mean people are not hiring. We had ADP numbers come out, unemployment claims higher than they've been, non-farm productivity is worse than it's been. But here we go. The big announcement came out. Non-farm payroll. We had a revision from the previous month of 14K. It came in at 79K. Or actually, sorry. Revision from August was raised 6,000, but still we were less than expected and came in at 22,000. Now, I was a little nervous, right? I was a little nervous. And I'll tell you why I was a little nervous. I thought somebody else would get fired. They reported bad numbers, and we know that when that last person reported bad numbers, I'll tell you what, if it was my job to report the numbers and the bad number came out, I'd call in sick that day. I guarantee it. Absolutely guarantee it, right? I would guarantee that I would be sick that day. So last week, right, we had some kind of a bad set of announcements, and we saw that reflected in the stock market. Well, let me jump this to the SPY. We saw that reflected in the stock market as well. You know what? I'm going to use this. Nope, this one, and we'll go here. I knew I had it up. And we talked about in this session that hey, we probably would see some movement pushing down going into next week, and we got that, right? The market, yes, we kind of set a new all-time high on Friday, but we also whipsawed down and fell down like 643 is where we came back down to. And we saw the rally up and came back down here. And then snapped back towards the end of the day. But this was much to be expected of what we saw, right? Absolutely much to be expected of what we saw. We're in a very uncertain time market wise. This did reach the D extension though on Friday. So technically speaking, we have another fib right here to here. Will we get the market to pull back all the way down there? I don't know. Is it going to rally up to 7,000 one of these days? I guarantee that, right? One of these days, I absolutely guarantee that. Heck yeah, Jerry, that's great. Um, Made 10K last week. Is that futures or sorry, Forex? Let me add on. Oh, there we go. And then let me add on this. And then I'm gonna add on that. Okay. So, this week, awesome. Great job. Great job trading the ES there. So, this week, looking at what we have going on here, right? On the short term, fib, where we see the bearish indicator telling us to go bearish. We have bears here telling us to go bearish, and market energy is crossing to be bearish. And I just did something that I absolutely hate doing. New pane below. Okay, there you go. And market energy is crossing, saying bearish opportunity ahead. So I'm looking, I don't know if you guys can guess what direction that we may think the market's going to be moving next week. But if you say bearish, you're more than likely going to be right. Right? If you say bearish, you're more than likely going to be right there. Let me also get signed in to FactSet here to make sure I'm not missing anything. And here. Um, oh, that's not it. Oh, huh. You gotta put in the password before it sends you the verification code. Come on. There we go. 670. Okay. So, in looking at this, right, again, they talk about non-farm payrolls. Job creation remains narrowly concentrated in healthcare and social assistance. Bank of America now projecting two 25-point rate cuts this year. Again, I don't even know if we'll get two. So I think what we will see is a rate cut though this week. Um, Let's see. Google won the antitrust rally, so Apple will be a beneficiary of that ruling as well. Broadcom rallied on disclosure of XPU orders from fourth customer, OpenAI. Amazon rallied 4% on Thursday on the back of report of data center build out. Consumer resilience, key takeaway. Macy's rallied 20% as well. JetBlue cited strong summer travel demand. We'll take a look at JetBlue. I own them for a little while. I'm check them out as well. So we'll take a look at that. Oh, the other thing that just happened, just now, by the way, 11 hours ago, Japan, so tell me if you guys like this, okay? Yes or no? I want to hear it from the gallery here today. All right. Yes or no? In Japan, you elect your prime minister, and then every year you have to re-elect that individual based on their previous years what they got done. Did they do it right or did they not? How many of you would love to have a re-election like that yearly? Partly I don't know if I would because then I would absolutely never be on social media just because everybody's a political pundit. But also, if we could vote out like Congress people like that, that'd be great, because hey, they may stop taking money, right? So Japan is gonna have a new prime minister. And it'll be a changing of the guards. We will see what should happen. So we'll look at some Japanese yen stuff. We'll also gonna look at oil, right? I know oil this time of year is always big to talk about. And let's get into last couple of things is this week's announcements. We have PPI numbers coming out this week. We have CPI as well coming out this week. These are measures of inflation, okay? And then consumer sentiment. So, yes or no, really quickly, do you guys know what PPI and CPI is or no? Yes or no? Do you know what it is, what it's measuring, how it's measured, and what the impact is? Lawrence, Lee, Keith, Jeff, Jack, Peter, anybody? I got two yeses, three nos, couple of maybes. So we'll touch on them briefly. So what they are is a measure of inflation, right? So let's go into it here. So PPI is it's the price of finished goods, right? So whatever it takes to make that widget, gidget, gizmo, gadget, whatever, and that's your landed cost, right? So think about it this way. If you are a manufacturing company, let's say, and I don't care if you're a US based manufacturer, you're going to import something from somewhere, right? So when you import that good, let's say you're a car manufacturer and you're importing, I don't know, door handles and center console units and CPUs for your cars, right? And you're going to pay now a tariff on wherever you're getting that from, which is going to raise your cost, right? Because your input cost just went in. Then let's say you're going to raise your labor costs because people need to make more money these days because inflation has really crippled, the I have a saying, and I don't know whether you like it or not. Just think about it. The $5 bill is the new $1 bill, right? That's just the way I look at it, right? So, um, Jerry, there's very little that we're not a manufacturer. This is where a lot of people get historically very, very forgetful. The United States has not been and could not, we don't have enough of raw material to be a global manufacturing hub. The reason why we were in the 40s and 50s was because of what happened in the 30s and the 40s, which was World War One, World War Two, and what happened in Japan with the atomic bombs going off. Because of World War One and World War Two, there was no actual country that was developed and had the labor force that would be able to support manufacturing in the globe. Not one on the freaking planet at the time. Because we destroyed primary manufacturing hubs, right? That's where they were building planes and bombs and missiles to attack us as soldiers. That's the first thing you do when you go to war, right? Is you take that stuff out because then it stops their production. So now they have to import stuff, right? So when you do that, right, when that happened, manufacturers had to come here. It, they were forced to come here, right? We are great at what's called top end manufacturing, which is like the design and building a fixed amount of them. And then once you want to mass produce it, you need to really think of labor costs, landed costs, and go closer to where your raw materials are. Right. It wouldn't make sense to have like a Starbucks size coffee operation. And I'm talking about the growing, not the brew houses, the growing of coffee. It wouldn't make sense to have that much coffee in America because you have no place to grow that type of coffee, right? We don't have that area. We don't have the forest. We have wheat, soy, plastics, natural gas, though cotton, right? Now here's another thing as well that is kind of scary. I forgot to mention this and I forgot to bring up the article, but I will try to remember to post it in Discord right now. So I was watching this interview because farmers are I have a very big spot in my heart, head, and mind and body for the people who are farmers in America. My grandfather grew up one of 32, and they had to farm for their food. Otherwise, they didn't eat. They had to hunt and farm, right? They lived off the land. He was one of 32 children. I know, my goodness. Thank God there's cable. Otherwise, we may be half the population in America, my family. But here's the thing is that what in the United States, the majority of our crops are used as exports, right? Corn, wheat, soy. That's the three biggest things that we produce. And then pork is another big producer. Well, right now, as of this point this year, about 25% of all soybeans would have already been sold, bidded, and closed on by China. At this point, that number has dropped down to 3% of our crops. So if they can't export this soy, who the hell knows what's going to happen to that because they're subsidized by the US government. That's another fact, right? Um, no, it goes. We mainly, Van, absolutely. We mainly export it. Well, that's our biggest exports are corn, wheat, soy, cotton, pig. That's what it is, right? That just is what it is. Um, Van, there you go, buddy. Now, the other thing is that farmers have gone bankrupt faster this year than in the previous 5, 10 years. And who knows what's going to happen with that? Ugh, Steve, let me just say it that way. Ugh. Now, I'll tell you, you want something to drive me out the country. That's about the only top thing I'd leave. Don't mess with the beef, right? Um, and so has the vice president is part of a company that they or he's invested in a company. That's the only reason I know it, because of public disclosure. I always look into that stuff. But there's a company that he co-owns with Peter Thiel and a couple others that basically are buying these farms out of bankruptcy, and who knows what's happening to them. I don't even want to speculate on that because this is not the forum for my tinfoil hats, right? Um, and I'll tell you, but it's not about the soy, it's about the money that's going to be lost because of that. And then just simple things like their equipment costs and, steel rods that they need for growing corn or tomatoes or things like that. Those have like quadrupled in cost for them. So our food cost is going to go up, right? This is where production cost matters. And what we think is going to happen is like, a lot of people think and have thought that, oh, if this happens on, let's say, on a Monday, right? If on Monday they vote in a new tariff, right? We'll call it that, TRF. If they voted in a new tariff on Monday, people expect the price to shoot up on Tuesday. No, you see what happens is it'll slowly rise and then it'll flatline for a little bit because they have inventory. They have stuff already processed. They have stuff coming. They have it there, right? But then the next one that's scary is that next jump, it may be 6 months or 2 years later. As a matter of fact, the first Tariff Act in the United States happened in 1922. The second Tariff Act happened in 1927. It took 2 years for the effect of those tariffs to create global deflation, which led to the Great Depression because we were in a deflated economy with interest rates that were already at lows, and then you couldn't hire and you couldn't raise prices because you couldn't hire and people had no money, right? So that's where it all kind of came to a head. So I'm not saying that's the case this time. Who knows, right? Only future will tell. But one thing I can tell you that I absolutely 100% see happening is stagflation. Do you all know what stagflation is? Yes or no? It's okay if you don't. I don't mind explaining it. But a lot of people will, I'm one of those individuals that I don't like to just prognosticate and think that everybody knows everything that I'm saying. Hell, I want to be questioned because I want y'all to know that I actually do know what the hell I'm saying. Okay. So think about this. Yes, Jerry, you got it right. Basically, it's like this, right? The prices. So let's say price of goods, it goes, it skyrockets, but money of, we'll call this goods and services, and then your income either stays flat or goes down. And the problem there is that they have to they can't keep raising prices forever because they aren't going to keep making sales. But on the other side, the CEO of a company has no responsibility to the consumers of that product, but complete responsibility to the shareholders, right? To shareholders. And so this is where we are, right? Is that incomes aren't going to continue to increase, and they haven't really increased. I'm actually working on this table. When I finish the data, I'll share it with you. But basically, what I have seen is if you look, you know, what's crazy is I looked pre, I'm gonna say stuff that's controversial. I'm just gonna say it. I'm gonna identify this by eras and as well as things that were voted on, etc. Up until literally you could draw a line in the sand in 1980, right? In 1979 all the way to 1980, income and pricing, they were tied like that. In 1980, a few things happened. One was there was a vote in 1980 that approved to uncap interest rates at banks and institutions. And so they began to raise interest rates as high as they wanted to in 1980. It uncapped it. And then the second thing was we kind of had the start of the whole trickle down economics, tax breaks started cutting tax for the wealthier individuals. Well, what occurred in 19 after that was generally we had a second vote on more cuts in 1985, and then in 1987 we had Black Monday. Well, if you look at all of the income data and as well as the price increases, right? Inflationary data, you had inflation doing this and incomes doing this. And then inflation came down, in the 90s a little bit, but then we had some more tax cuts and inflation has done that and incomes have done this. So inflation is, when I say it's outpacing, it is like literally here. I think I gave this stat, and this is where the stat came from, was this data that I've been combing through, which is that for minimum wage to be to have the same buying power that minimum wage had in 1981 for today, the same exact buying power, minimum wage would need to be $66 an hour. Okay? $66 an hour. So I just want to show you what that math works out to be because I had to, right? $66 an hour times 40 hours. That's $2,640 a week times 4 weeks times 12 months. You're looking at $126,720 is what someone would have to make today to live the same life as someone who made minimum wage did in the 1980s. How many of you guys find that shocking as hell? Excuse the French there. Like, that's absurd. Okay. And so it's led to this wealth inequality gap. It's led to several different things. And that's what I, help cover when I tell you guys that I give you guys these meetings and we'll do one-on-ones with you about your retirements and things like that. That's what I cover, is how do you combat that and how do you, make sure that you never lose money. So I'll send that link again because we've literally tripled the room size since we started. So I'm going to send it again to everybody. Um, Todd, I appreciate that, my man. Todd said, I'm disappointed that people don't speak or provide the information you're providing. Like it's unreal, right? Yeah, Ron, you're right. 26, 40, 52 weeks a year. I guess I was also, you're right. So 2640 times 52, it's 137,280. That's just insane. That's insane to me, right? It honestly, like, it infuriated me. And it's like at the same time, it motivated me. It made me realize, like, I don't know. We go in there, right? So, Lee, yeah, I have a webinar on Monday on that. I'll send everybody the link again to that too. Um, that's a webinar on what I'm doing. It's actually going to be live on Monday, but you can book an appointment with me and my team and that'll be fine. Now, earnings coming this week. I'm going to get through that quickly. Um, September 9th, we got Oracle and GameStop. We also have Chewy and Adobe on the 10th as well. Okay. Chewy and Adobe on the 10th. So, perfect. So guys, I'm gonna send everybody right now. Here is the client link if you want to book time with me. This is a link that you could use right now. I don't care. And you can book time with me. And I'll also send it at the end as well for you guys, okay? And I'll send the webinar at the end. So let's get into the stock market. So we already talked about the S&P 500, looking for a little bit of a pullback. I want to go first into the ES really quickly. ES and futures, because that market is open as of right now. And, we're not going to see a ton of movement in this first part, but so we know that the overall primary direction is more than likely going to be somewhat bearish here today and going into this. But I'm not just jumping into this. So I have bearish here. I'm waiting for this to tell me bearish, or I'm waiting for the cross of red above green to tell me, hey, go sell this sucker and let's make some money, right? Because I think that we will see another continuation of this bearish movement once we get a little bit of a longer term pullback, right? Which is we already have, we're there. So now I think we get that next bearish pullback, right? I don't think it's going to be a huge pullback, but we know September is historically the seasonality of September. It's the worst month of the year, right? It's the worst month of the year. So historically, we should see a fall. What I would do is if I were y'all on a 5 minute chart, I'd wait for a counter trend line break. If we get that counter trend line break, bam, we know we have the sell off, right? You could sell this now if you want. I wouldn't sell this now. Sorry, don't sell this now. Wait for either market energy to be your trigger or a counter trend line break. I'm also going to look at hedge fund trender really quickly. We don't have the red dot yet, but as soon as we get a red dot, that could be another signal for you to enter in. So short term, this meaning like the next few days, I'm looking for a fall in this, right? I just am. Um, I just am. I still think that we will have this fall um as well, and we're just waiting on that fall to happen is what we're looking for. So, keep your eyes peeled for it this week. And I could be totally wrong. A tweet could come out and change the market direction like that. So I'm keeping a list, by the way, and I'm checking it twice of some of the stocks that I regularly cover. So that way we can keep a list of things that we're going to go through. So right now, and I'll make it larger for you guys, this is what I have listed: OKLO, SMR, URA, UNH, AMZU, NVDA. I'm also going to talk about NVDX here today. Lululemon, Zoom, Apple. Are there any other companies that are what other stocks do you guys want to look at here today? And let's do a few. I know I'm gonna do special, I'll do some JPY stuff and uh CAD Swiss. Is that what it is, Jerry? We have Oxy, Petroleum. We'll look at some oil futures as well. UNG, Robin Hood, IBKR, um, GLD. Somebody asked for USD JPY. You got it. What else? Amazon, I got up there. SLV, good call. BTC. Um, OPEC auction. Yeah, it is. It's not something that, we don't get a lot of data out of. So very few people actually like move based on the auction. The thing I look for, Steve, is what happens right after the auction, which is the production meeting, right? So if you remember back in 2021, we had that's when they shut production down, right? That's when they shut production down. ETH XRP for those that do that. And you know what? I'm gonna move that here, and I'm actually going to I'm gonna try to categorize some of these a little bit. Oops, undo. And okay, so let's jump on into it. Um, so yep, we'll look at gold. Absolutely, we'll look at gold. I'll probably look at gold futures first. All right, let's do this thing. So, I have pretty much everything you guys want on another thing, so I'm gonna just kind of run through a few of them. So, first things first. Here is gold, right? Gold is coming back down off of those major all-time highs, 3650. I kind of called 3650 in gold. Now we've seen it, we're seeing the pullback here. I have a 30-minute sell, a 4-hour sell, and a daily sell, all telling me to sell. The only thing that is telling me to buy is buying volume on the daily. But if I go and take a look at GC with um GC on the daily with hedge fund trender, that we don't have the red there yet. We still have buying power in control. However, Tyson's indicator is showing us sell. This indicator is showing us to sell. I do think we'll get a pullback in gold, even if it's just another back down to support and resistance at 35.59, right? If it's $30, it's $30. But I honestly think it could go to 35.40 is where I look at it, just kind of coming back to this level of support and resistance before its next major move. And uncertainty is the great predictor in gold, right? Uncertainty is great predictor than gold. So I'll call that short term down. So we'll go what did I say? 35.45, 35.45 is where I'm looking at it to go down to, then up from there. Let's take a look at PLTR. Palantir, we're in sell mode. Sellers are still in control. We're not at the lows here yet. We could get a little bit of a pullback to 172 before the next push down, but I think 129 is in our future on Palantir. I think 129 is in our future, but I am telling you, Palantir is one of those stocks you're just going to want to own for your whole damn life. Until the government decides to not build these social profiles on every person in the United States. Until they do that, and they say, nope, we're not going to do that, then that's when I would get rid of Palantir. But I think short term, if we break below, let me go ahead and do this. If we close below this level of support and resistance, 148.26, then we're looking to sell. If we do not, look for the buy. So let's say sell below 148.26. If no break, look for buy. So, and I mean just a close below that line, not a wick, a closed, okay? A close. Okay. Um, let's see. Let's look at APP. That's Appfolio, right? No, App11. Um, this looks like it's going to go bearish here down to 438 on the daily. We're getting bearish signals here. We're coming off of the highs here. This is going to break here. Even though earnings was good, what's the latest out of this? Um, App 11 joins the S&P 500. That's fantastic for the stock. And Robinhood will be in there as well. So, it'll be good overall, but just know that it's going to pull back a little bit before it rallies up. So it's going to pull back a little bit before it rallies up. I'm absolutely comfortable in saying that. So look for a little bit of a pullback and then the next rally up. Okay. Let's see. We'll go take a quick jump at oil and oil futures. I do think oil is due for the next rally back up, right? Look, uh there's a show called Landman. It's on Paramount. It's by the guy who created Yellowstone, created this show. It's a great TV show. I'm gonna just say that right now. It's an absolute fantastic TV show. But there's actually some really amazing points in there about the oil industry that these characters are making. And one of the things that's said in there, it is it is so true that I was not aware that it was like this tight of a range, but I called a so when I lived in Houston, I used to play golf with a guy who was he was a seller of oil to companies, so a wholesaler. And he worked for the production company, right? There's big industry in oil in Houston. But price of oil per barrel needs to sit between 86 and 96 for a sweet spot for America and for oil companies. If it gets to 106, the oil companies are making more money and then it'll come back down. If it gets to 86, then they're not making enough money. They'll slow drilling to bring the price back up. So if you're thinking bullish oil, I would absolutely could agree with you on that. I could see it going from 85 to 96, somewhere back up in here to that level of support and resistance that it's at. And look at that. You know what I mean? Cover me in powdered sugar and call me a donut, but right here, there you go. Resistance all day. And we've been well below it. And you know what? We're below that level of support, right? We're bouncing off of 82 up to 85. This is where we need to have it live, right? We're below that resistance level. So that's a $10 move, right? Is for it to go from there to there, it's not going to happen overnight. We do have the auction, like Steve was saying, we have the auction covered, but then I think we need to get it. We're gonna get it into this range. This is gonna be that sweet spot range, right? I don't. Is it gonna get down into this $60 range? Maybe, right? Depends on how much production increases or does production decrease. The other thing is the winter blend of oil of gas is more expensive. So that's why gas prices historically are higher in the winter. So we also have the winter blend as well coming as well. So looking at this, I think that oil futures are bullish. Let's take a look at Oxy. Um Oxy, this is still kind of we have a red dot. However, this is say sell. This does say sell. I'm not going to deny that it doesn't say sell, but when I look at this, I also see there's fib 1, fib 2, fib 3 pulled down to the green. I also see this going back up to $50 to $51. So I'm not convinced that we're not going back up in this thing. There's a gap right here at 51.84. That would be absolutely comfortable going that, right? Absolutely comfortable going for that. Again, this is on a daily, Steve. So on a 30, it'll probably look a little bit different. So, Steve, are you saying it's a sell-off there, being above the cloud? Long now. Okay, gotcha. Yep. So 30-minute, long. Yeah, it's time to go up, right? I think up to 51.84 is where I honestly think Oxy Petroleum could go to. Let me do that. OXY by 51.84. Um, let's go to UNH really quickly. On United Healthcare. This is one of those stocks, I kept telling y'all about it. Y'all just think I know some of y'all back in here when I was talking to people about it back in July and August. Y'all were calling me Nostradamus over there at home, but I know a thing or two, okay? I'm telling you now, the first stop for this stock for me, my first, hey, I'm going to take a little bit of money and take some profit is at $377. I've been saying and screaming since honestly, it was like 290 to buy it, and it's that 238 now. I think this eventually it gets back to 582, right? What caused the big drops in it? Well, the first drop, like back in here, was when Mencioni killed the CEO or whatever. The second drop was this lawsuit by the government. That was already a known. People knew about that back in 2021, 2022. They had already had the money set aside to pay that off. That's all paid off and behind. It's not even going to be in the books next year. Guys, I'm telling you now, there's not an insurance company in the United States where healthcare is the largest section of GDP that we spend on and consume in America, right? That is going up. All right. So long term, this is going up, right? Short term, we may see a pullback. So look, if you guys aren't in it and you want to get in it around 288 or so, it's a great spot. It's a great spot if you can, right? So if it goes from 315 to 288, I'm fine with that. But I am still holding long in UNH, and my ultimate target is 582. But my first is 377.03, and then second is 582.09. Okay. Let's see. Awesome. Awesome. Let's see. um, let's go now to let's take a look at SMR. Our nuclear reactor company. Look, we already hit we broke that level of resistance, of support there. So now we know this is the gap that we've been hunting, right? We took the rally up, we got out of this. I said, hey, it's gonna pull back. We're pulling back. This is potentially gonna come down to this area. Now, if we don't fill this gap, that's okay. This is a stock that I would potentially build a position in, not just trade the options around, but if you're comfortable trading options, do whatever strategy makes you comfortable, right? We hit the D extension here, so we know that, hey, okay, we pulled back. I believe that we are going to pull back down and look at around 30 bucks. That's my next entry on this is around $30. If we get in it at 30, and I probably will buy a few shares of it right now at 34 because I'm not worried about a $4 swing. This is a long-term play for me. This is what I would call like a portfolio play. And if you don't know what SMR is, they are a small nuclear reactor company. And when I mean that, they build small nuclear reactors. And what they're going to do is they're going into like hard locations to get to, and that's where they're building these to power parts of the country that are dependent on different forms of power. But in the long run, nuclear is the way the world's going. Okay. Right. OKLO, they build bigger ones, right? OKLO is bigger ones, but Keith, but OKLO is another one I am all about as well. So, nuclear is here to stay and it's the future of energy. It just is what it is. Like there's no way around it at all. OKLO, we took this one. This was actually like my first trade we called in here was back in May. We took a buy and held on to it up to about 80 bucks. Missed the top, but look, let me tell you what I'm doing, right? I am not here to pick tops and bottoms because then you're just left with stinky fingers, okay? No picking tops and bottoms. Otherwise, you're just left with stinky fingers. So this though on a larger scale, and I'm gonna hide all the drawings as well. Hide all drawings and hide all. There you go. So on this, one of the things that I see in this that tells me not the time to buy yet is there is a kind of a pattern that's known as a king's crown pattern. Okay. And basically, the first part of said pattern is we want to somewhat, we basically have what's called a left tip, center tip, right tip, and if this breaks below this line, it's gonna fall. Okay? It's gonna fall. So, Jerry, I get what you're saying there about that. Here's the thing is I'm not just like whenever there's a disaster, the thing that people do is they have an aversion to going back to what created the disaster. Absolutely, I understand that. But if you can understand the disaster, then you may be able to prevent the disaster again. Fukushima had a meltdown because of the earthquake that created the tsunami that knocked rods insecure. Chernobyl, obviously, that was a different one. How many of y'all knew this? Here's the craziest fact that I saw on the History Channel. Did y'all know there was a Chernobyl-like incident that happened after Chernobyl in Canada? And Canada needed some US military people to help them secure this location and to help not for the meltdown to happen, right? To help that and fix that. So they sent in a barrage of US troops that helped. They were lowered into the reactor for a certain amount of time. They did what they had to do. Then the next group would go in and the next, and it was like back and back, back and forth. You know who was one of the individuals that did it? Did you know who was one of the individuals that did it? President Jimmy Carter. Folks, I wish I was lying. I wish I was lying. It's the craziest thing I've ever seen. I did not know this. Right? Jimmy Carter deployed to nuclear reactor. Canadian nuclear reactor. I'll send you guys the article. This is on military.com, folks. This is so crazy. Honestly, they talked about how like he had to go through all of this stuff. He was honestly, if you go read about somebody I did not know as much as I know now about President Jimmy Carter. Amazing guy, helped save Canada from nuclear meltdown like Chernobyl. How about that for you on this day? Right? You didn't know you were going to learn some United States history when you came into here. I didn't know I was going to preach it. But we started talking about nuclear reactors, but my thing I was going to say, Jerry, about the nuclear reactors is when you examine really why this stuff happened, well, you had literally reactors that were designed with technologies from the 1930s, constructed over the 40s and 50s, and expected to be operated for today's use and capacity. That's ridiculous, right? The whole premise of that is ridiculous if you think about it. But you take it a step further and do what they're doing now with OKLO and SMR, where they're able to use nuclear waste, which is much more stable, won't melt down, and then knowing how to contain it if something does happen and how to build these things. It's an entirely different process than we've ever thought possible, than we known, right? Than the news will tell you about. And we have enough nuclear waste in America to power America for 400 plus years sitting under the state of Kentucky. Okay, like insane. So insane. Um, Jerry, you know what? That's why I don't eat seafood still to this day because of Fukushima too. Anyway, let's get to another stock here. Let's talk NVDA and NVDX. I want to talk about that here really quickly. Okay, now, and I'm going to show you the difference through a few of these. So NVIDIA, I think we're getting to that point where now's the time to buy in on Nvidia, right? We're at 164. We are at the last kind of little level of support and resistance here. I mean, it could fall to 145. So if you're building anything, be careful. But 164 is a great number for Nvidia. I think we pull back up to 170, 180 here this week in Nvidia. But let's say you were looking at something else, like they're what's known as like 2x bullish shares on companies like Nvidia and Amazon and stuff. One of them is NVDL, and those are it's by a company called Granite, and they're $76. Another one is called NVDX, right? And it's $15. So when I see something like that, I say, okay, look, it's extremely volatile. This is not something you're going to want to play around with. But in the same time that Nvidia has dropped 10%, they've dropped 10.67. When Nvidia goes up, 15%, they'll go up 30%. Right? So you got to understand that they're 2x the volatility. But you can get into them cheaper and they can also give you a little bit better return. So I'll send this stuff out there to you guys so you guys can see it. And you make your decision on how you want to trade NVIDIA. I am probably going to get into something like NVDX to test it. I more than likely will. If it falls to like, $5 or $10, if it falls to $11, I'm not worried, right? That's $4 movement. I'm not too worried. But if it rallies up to 19, right, I'm okay with that. If it continues to move up, could it fall back down into this level of support and resistance? You're absolutely right. It absolutely could. So the only thing I'm going to wait for, I am going to tell you guys, I am going to wait for a cross. I want to see buying volume here before I just jump in. I want to see buying volume there before I jump in. All right, I'm going to check it on another set of charts of mine as well. And again, I want to see buying volume in here beginning to add to it. My RSIs tell me to buy, my custom indicator tells me to buy, but I want to see that buying volume in there, right? I have to. NVDX before I just jump in and buy. Like I am absolutely okay. I just want to see the buying volume. Once I have buying volume, I'm getting into NVDX, okay? Buy with volume. And you guys trade it how you want to trade it. I'm just telling you now. Zoom's another one, and then I actually absolutely have to go. I got 5 minutes before I'm 5 minutes late to a meeting. But Zoom, I think we have reached the peak on Zoom. We're back into its kind of consolidation range here that Zoom has been in. Like we were in this consolidation range, we were in this consolidation range. We are in Zoom's consolidation range right now. And I think we get a little bit of a pullback to about $78. I hope you've been buying it with me. I've been telling you all to start getting into it in the 70s. But now I think it'll pull back to about 78 before we take off again. I really do think that we will take off on Zoom as well. Um, and I'm looking for Zoom to get into the $100 to $200 range, honestly. I think it is a company that is going to continue to be used more and more and more. And all startup IPOs have all had this same pattern that I've noticed over and over and over again. They rally up. You have your warrants and your initial shareholders and your private equity companies that take their profit. Then they just sit there for a while. And then, bam, people are like, oh crap, look at that history of earnings. Yeah, they're pretty damn good. So, pretty darn good. So, wouldn't you expect Nvidia to be bought on a dip? Yes, surely I would, but I got to tell you that Nvidia, right, it's not done dipping. Right, we still have a lot of unknowns with Nvidia, the price of chips to China, how much money the government wants to sell to China, what cost is it going to create to develop a specific Chinese chip and not a US chip? Cost of manufacturing, input costs, all sorts of stuff, right? So there is a lot of stuff happening with Nvidia that I'm not just gonna jump on into. So look, guys, I'll do CAD Swiss really, really quickly. CAD Swiss really, really quickly. And so again, seller's still in control here, but we have a little bit of a bias to buy. So could get up to back up to 58,472. You know, if oil does rally, Canada's currency should rally, and that should allow it to kind of push up. So, with that, guys, I have to run. Thank you all for joining me this week. I'm going to send you all one more time. This is my calendar link. If you want to talk about investments, retirement, asset management, things like that, click on that link, book a time with me, or join my webinar on Monday at 4 p.m. Eastern. And I will see you guys in a webinar this week. That is one thing I know for sure. Love you all, and we'll see you guys next week. Stay safe. And if you have any questions, reach out to us on Discord. Have a good one. Bye for now.